All right, everybody, welcome back for another deep dive.
Yeah, it's good to be back.
We like to look ahead here, and PUMA is doing the same thing, right, with their 2025 financial outlook.
Absolutely. Trying to gaze into that crystal ball.
Yeah, so we got our hands on, some excerpts from that,
Yeah.
and I gotta say, it's a little bit of a mixed bag.
It's bag indeed.
Yeah, so we're gonna try to unpack it all and see if it looks like smooth sailing for PUMA or if there's some choppy waters ahead.
Let's see if they can outrun the storm.
Yeah, exactly. So, like, one of the things that jumped out at me right away is they're not sugarcoating things when it comes to, like, the global landscape.
Yeah, they're not shying away from the geopolitical and economic uncertainties.
Yeah, they mentioned trade wars specifically and
Oh.
and volatile exchange rates.
Yeah, those exchange rates can be a real headache.
Yeah, and like for people who maybe don't, follow the ins and outs of international finance, what's the big deal with exchange rates?
Yeah, well, think about it this way, right? If PMA is selling their shoes all over the world, and the value of the euro changes compared to, the Argentinian peso or the Chinese yuan,
Right.
that can really affect how much money they're actually making.
Yeah, it's like they sell a pair of shoes for $50, but then when they convert it back to euros, it's suddenly only worth 40.
Exactly, and that makes planning and forecasting really tricky.
Yeah, it does. So, given all of that, it's kind of interesting that they're still projecting growth even if it's on the conservative side.
Right. They're aiming for low to mid single digit percentage increase in sales, but that's after adjusting for those currency fluctuations.
Yeah, it makes you wonder, like, are they being overly cautious, or is that a realistic outlook?
Well, it's probably a bit of both, right? I mean, it's always smart to be somewhat conservative in your projections, especially with all these uncertainties in the global market.
Yeah.
But they're clearly still optimistic about their ability to grow the business.
Okay, so that's, growth. That's one side of the coin, but then they also have this whole next level program that they're rolling out.
Next level. Yes, that's their big push to become more efficient.
And on the surface, it sounds great. Like, who doesn't want to be more efficient, right?
Right. In theory, it should lead to cost savings and ultimately higher profits.
But there's a catch, right?
There is. They're expecting some significant one-time costs associated with implementing Next Level.
Like a lot of costs.
Yeah, up to 75 million euros in 2025.
That's a big chunk of change.
It is. So it's a bit of a trade-off, right? Short-term pain for hopefully long-term gain.
Right. So kind of like, renovating a house, right?
Right.
You gotta spend money to rip things out and fix it up before you can enjoy the beautiful new space.
Exactly. You have to invest up front to reap the rewards later.
So how does that kind of play into their EBIT? I know that's a financial term that people might not be familiar with.
Yeah, earnings before interest and taxes.
Earnings before interest and taxes. There we go.
It's a way to measure the company's profitability from their core operations.
Okay, so they're hoping that Next Level will ultimately boost their EBIT by 100 million euros.
That's the goal.
100 million, but then they're also saying there's going to be that 75 million in costs.
Right, so that would lead to a net gain of 25 million.
So it's kind of it's a long game that they're playing here.
It's a strategic bet on the future.
Yeah, and it's kind of interesting because they're giving us two different EBIT figures, right? There's the adjusted one that ignores the Next Level costs.
Right, which gives you a sense of the underlying performance of the business,
And then there's the actual one, which includes those costs.
which reflects the reality of their financial situation in 2025.
So is that like a common thing for companies to do to present those two different numbers?
Yeah, it's pretty common. It's a way to help investors understand both the short-term and long-term picture.
Okay, so let's shift gears a little bit and talk about their first quarter projections because those are a little bit uh, a little bit eyebrow raising.
Yeah, things aren't looking quite as rosy in the short term.
Now, they're expecting low single-digit sales growth for the first quarter, and a lot of that seems to be driven by slowdowns in the U.S. and China,
Two of their biggest markets.
huge markets.
So that's definitely a concern.
Yeah, and it makes you wonder, is this a PUMA specific problem, or is there something bigger happening in the athletic wear industry?
That's a good question. It's tough to say for sure at this point, but it's certainly something to keep an eye on.
Yeah, and then on top of the slower sales growth, They're also predicting a pretty significant drop in their actual EBIT for the
Mm.
first quarter.
Yeah. Once you factor in those next level costs, the EBIT takes a hit compared to last year.
And, I'm sure investors are paying attention to that, especially when it comes to dividends.
Absolutely. Dividends are a big factor for a lot of investors.
Yeah.
Well,
So how does a company like PUMA decide, whether to pay a dividend or how much to pay?
Well, it's a complex decision, but they typically look at their profitability, their cash flow, and their future investment needs.
So if things aren't looking so great financially, they might have to cut back on the dividend.
That's a possibility, yeah.
So okay, let's try to wrap all this up. So PUMA is facing some challenges, but they're still optimistic about the long term.
Right. They're betting big on next level to improve their efficiency and profitability.
But it's going to be a bumpy ride, at least in the short term.
Yeah, those one-time costs are going to have an impact.
So what's your overall take on all of this?
I think it's a bold strategy. They're making a big bet on the future, and it'll be interesting to see how it plays out.
Yeah, it's a bit of a gamble, but maybe that's what it takes to stay ahead in this competitive market.
Maybe so.
And it makes you wonder, is this a sign of things to come for the entire athletic wear industry?
It's possible other companies might need to make similar moves to stay competitive.
Yeah, maybe everybody's going to have to find their own version of next level.
Maybe so.
All right. Well, that's all the time we have for today, but definitely some food for thought.
Lots to think about.
Thanks for joining us, and we'll see you next time for another deep dive.
See you then.